Wipro in just a bit. Infi numbers are also flashing for you on your screen. Well, look at the beat over there. Infosys has reported a net profit of 5197. This is a good 100 crores higher than what we were anticipating, and I think it would imply roughly a 7.2% improvement in the profitability on a quarter-on-quarter basis. 25,927 is what the company has reported by way of a revenue growth, revenue for this quarter, which would be an improvement of 5.5% on a quarter-on-quarter basis. Again, slightly ahead of expectations. The key numbers would be what they do in terms of their revenues, dollar, constant currency, as well as the margins. 6,589 is what the EBIT for the company stands at. This is also ahead of expectations. 25.4% is the EBIT, which means margins are largely flat on a quarter-on-quarter basis. This is not a beat. It's largely in line with expectations, slightly mildly ahead of expectations. But unlike the big blockbuster margin improvement that we had in the case of Wipro and even for TCS compared to expectations, Infi's margins are flat with a positive bias, but there is no big material beat compared to expectations. So what we'll await is the dollar performance as well as the constant currency performance, where the street expectation is of close to about a 3.5% growth. But needless to say, Infosys numbers prima facie are looking good. The company has reported a revenue growth of 5.5%, margins up 5 basis points sequentially at 25.4%, and profits are higher by 7.2%. Shireen.
Rima, I just wanted to alert you about the FY21 revenue guidance that's coming for Infosys. FY21 revenue growth guidance increases to 4.5% to 5% in constant currency. FY21 operating margin guidance has been increased to 24 to 24.5%. So that's the latest that we have. So revenue growth guidance increased to 4.5% to 5% in constant currency, and FY21 operating margin guidance increased to between 24 and 24.5%. Rima.
Well, Shireen, this is much, much ahead of what the street was anticipating. We thought Infosys would be a bit conservative. Consensus were of a 3 to 4% increase. Some were pegging it at 3 to 5%. But a 4.5 to 5% in terms of a revenue growth is for the full year is much ahead of what the street was anticipating. And considering post-COVID, we'd started the year expecting negative growth for IT companies. Infosys delivering close to a 5% growth for the full year is indeed an absolutely V-shaped recovery that we've seen for IT services companies. Margins too, the expansion to 24 to 24.5% comes ahead of expectations. And the reason is Infosys was going to, the wage hikes for Infosys kicks in January, which typically means that margins would have been under pressure, but clearly they are in a position to offset it. So the margin guidance is also very upbeat. You know, what has happened is most of the IT companies have, taken substantial cost savings. Of course, travel discretionary spend has come down, but they've also implemented cost optimization measures at the start of the year in anticipation of pricing pressure and growth being weaker. But instead, we've hardly seen any pricing pressure, except perhaps in some affected verticals like travel, etc. But pricing has largely been stable, and growth has been, growth has rebounded faster than expectation, which is why that cost saving that the companies have initiated for the last 9 months are actually reflecting in much higher margins. And this improvement in margin trajectory is a story that we're seeing across the board in IT companies. But Infosys guidance has actually come in much ahead of expectations, and the street is going to like these numbers. 3,516 is the dollar revenue for Infosys. This would mean a dollar revenue growth of 6.1%. This is very, very strong, much ahead of expectations. The street expectations were of a 3.5–4% kind of growth. The company has delivered a 6% margin performance. For those of you who've just tuned in, both Infi and Wipro have reported very, very strong numbers. That good run from IT earnings has continued. Amit Chandra, the Assistant Vice President at HDFC Securities, is also with us. Amit, first, if I could have your thoughts on Infosys, the improvement in guidance, and what happens from here on, because the stock is already up 80% in the last 1 year.
So it has been an overall strong performance by Infosys in this quarter. So, like you take any parameter, they have exceeded expectations, maybe on the top line growth, on the margins, and also in the large deal signings, which has been the largest ever. So large deal signings of $7 billion. In fact, it has actually doubled, from the last quarter. So, I think, very, very strong performance and, increase in the outlook in terms of the guidance, is also indicating towards a more, like sustainable growth that the company or in fact, it's a sectoral tailwind and Infosys has been executing pretty well. So I think, the sectoral tailwinds and the super execution by the company will continue, and, we remain pretty positive on Infosys.
What happens to your EPS estimates, your growth estimates for next year?
So we will have to revise the EPS and the growth estimates. So, it's like too early to say, but yeah, obviously, there can be an upward revision. But, in fact, in terms of the growth, we were already at 5.5% for FY21. So I think, the strong deal momentum will continue, and the kind of deals that they have reported in this quarter, that will also help them to accelerate the revenues in the next quarter. So the Daimler, there's also a deal that they have reported. So these are large deals, and I think it will help them. At least we have the visibility of revenue at least for the next 2 quarters in terms of strong growth. And the Vanguard deal that they won, so that has also helped them, help them to post a strong revenue growth this quarter. So this surprise for the whole sector has been on the margins. So in the third quarter, despite the furloughs, the third quarter being a seasonally weak quarter, we are seeing exceptionally well performance and super performance on the margins front. So in terms of the peers also, like Wipro, TCS, they all have actually surprised with the margins front. So I think the offshoring lever, the structural change in the delivery mix, and the cost savings that the companies have achieved throughout, and the work from home model is actually helping IT companies to expand margins. And I think these things are more structural in nature, and it's like here to stay.
Clearly, the numbers are a reflection of the turnaround efforts which have been initiated by Salil Parekh in 2018, whether it comes to scaling digital, and digital is now 50% of their overall revenues, having grown 31% on a year-on-year basis, and digital crossing that 50% mark is something Salil Parekh had alluded to in his interaction with Shireen just about a few months back. The large deal success, the stability in management is all reflecting in the kind of resilience and outperformance in performance that we've seen in the last few quarters. Amit, the question always is between Infosys and TCS, which one should you buy now? TCS is larger in size, its margin performance is superior to that of Infosys, and Infy, on the other hand, trades at a discount, is growing at a faster clip. So which one would you recommend buying?
Obviously Infosys has been our top pick, and if you see in terms of the execution, in terms of the deal win, Infosys has been doing pretty well. And if in terms of valuations also, if you see the discount between Infosys and TCS is actually narrowing down. So if you see the historical averages, Infosys used to trade around 15% discount to TCS, which has now actually come down to 7.5%. So obviously, the long-term discounts have actually come down. So and I think in terms of the performance, in terms of deal wins, and especially in terms of execution, Infosys is at par or in some cases better than TCS.
Large deal wins at over $7 billion, with 63% of it being net new, which just indicates that Infosys has been benefiting from vendor consolidation. They've been winning deals from peers as well. $7 billion in terms of deal win announcements this particular quarter. And clearly there is, a lot of momentum which the company has been enjoying. And Amit, could Wipro turn out to be the dark horse? The numbers are looking very strong for Wipro as well. We're talking about revenue growth of 3.5% to 4%, something that we've not seen Wipro deliver in the last, 5-6 years. So could Wipro start narrowing the gap vis-a-vis its peers?
Yeah. So, certainly, the performance of Wipro has been exceptionally well. So in terms of Wipro was lagging in terms of growth. So they have actually shown improvement, and also in terms of deal wins. So they have also reported $1.2 billion of TCV this quarter. So the deal wins of Wipro has been strong, and with the change in the management, the focus has changed, and the whole organization is going through restructuring from Jan onwards, and it's going to be more like leaner organization. So I think a lot of catch-up has to be done by Wipro, and also the major surprise on the Wipro has been the margins. So there has been consistent improvement in the IT services margins over the last 2 quarters, and obviously on the capital allocation, on like cash generation, Wipro has been always the best in the industry. So I think the only drawback for Wipro was growth, and I think there is constant focus to like revive growth and the kind of deals that they are winning, and I think at least they can reach the industry level growth rate, and the sectoral tailwind is actually helping the larger deals in terms of for all the top tier IT companies. In terms of vendor consolidation, as you mentioned, so vendor consolidation is also a trend that is playing out, and in terms of offerings, in terms of the end-to-end deals, transformational deals, the Indian IT companies are able to perform a very, actually the Indian IT companies are able to win deals, and that has been reflected in the like in the quarterly performance.
I remember what Rajesh Gopinathan had said last quarter. We are at the start of a multi-year tech upgrade cycle, and clearly this technology upgrade cycle with cloud at the backbone is lifting all boats, because now TCS, Infosys, Wipro, Tata Elxsi, so large cap, mid caps are all reporting blockbuster numbers, and the best that we've seen in the last 5 or 6 years, the growth rate. Omkar Tangsali of Axis Securities is still with us. Omkar, you've had a look at numbers from Infosys. First, if you could share your thoughts.
Yeah, Infosys definitely have reported stellar set of numbers, which our expectation in all the terms, whether it is for margin, it is for revenue growth and all. So we can say even the deal wins come very, very strong at $7 billion. So we say that Infosys have definitely reported strong set of numbers.
Yes, absolutely. Very, very strong set of numbers. For Infosys, this 5.3% constant currency growth rate on a sequential basis is the best that we've seen in the last 21 quarters. So as you can see, across the board, the growth rates that IT companies are enjoying are the best in the last 5 or 6 years. But Omkar, should IT companies with this kind of an earnings growth momentum trade at even higher valuation multiples than they are currently? Because TCS is already at 30 times, Infosys is now trading at 27 times, and Wipro is already at 24 times. And these are multiples which are much higher than their historical levels. The question is, should they be trading at even higher valuation multiples?
Yeah, definitely. These multiples that these IT companies are gaining just because of the visibility and the deal flow that is coming across verticals and across industry sectors. As if the market overall sustain its growth momentum, then we can definitely say that IT will overweight and outperform the market, as these companies having the higher visibility because of the deal closure and the strong execution in terms of margin. There were headwinds in these quarters, as like wage hikes and salary hikes, but they have managed surprisingly very efficiently, and we can say that the margins will, in terms of execution also, they are sustainable in forthcoming quarters. So we can expect some of expansion in terms of valuation and PE multiples that they're gaining right now, if the visibility sustains.
Amit, same question to you. What should be the fair valuation multiple now for IT companies?
The multiples for the sector has already rated a lot in the last 6 months. I think until unless the visibility is there in terms of growth and they are able to execute well, I think the multiples are here to sustain. And I think from here on, the sectoral reset of margins has happened, and I think with like more like deal wins, it can accelerate also. So the best part about the sector has been the this thing, longevity of the growth, right? So from here on, the sector seems to be less cyclical. The visibility, the longevity of like clocking 8 to 10%, like 8 to 10% dollar term growth is high, and also in terms of the capital allocation, it has been improving. They have been returning cash to shareholders across the board. So I think these all factors will help in sustaining the higher multiples for the sector. So if you see the 5-year, 10-year multiple, all stocks are trading way above the 5-year, 10-year. So the 5-year, 10-year is not the like benchmark now. So they all the stocks are in a different zone right now, and I think with the strong performance, these like multiples are here to stay.
Yes, absolutely. If IT companies are growing faster than they did in the last 5 years, so why should they be trading at valuations which they enjoyed in the last 5 years? So if growth is back to the olden days, say what they enjoyed in the last big outsourcing wave, perhaps the valuation should also get re-rated to those levels. Amit, Omkar, as well as Urmil, thank you very much for joining in and analyzing Infosys as well as Wipro's numbers for us. Those were the two big IT majors which reported numbers, and across the board, it's a beat on revenues, margins, profitability. Infosys has upped the guidance. They're talking about a 4.5% to 5% revenue growth for FY21 with a margin upgrade as well to 24 to 24.5%. Wipro's Q4 guidance at 1.5% to 3.5% is ahead of expectations. The internals are strong. The management commentary is upbeat. Infi deal wins at an all-time high. So across the board, these are very strong operational metrics. The only question is, do IT stocks run up more from here? Because remember, both Infi and Wipro have moved up 80% in the last 1 year. On that note, we'll slip into a very short break. We'll come. Shireen, are you going to take it over, or do we get into a break now?
No, we are going to head into a break, Rima, but what I was going to say is that who would have imagined that in the midst of the COVID pandemic, we would be talking about IT companies who have gone back to the kind of growth rates that they saw almost a few years ago, but that's how things have panned out. The report card for tech companies looking very, very strong. TCS, Infosys and Wipro, as Rima was pointing out, it's a beat on all fronts. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment.